You know, we hear a lot about cryptocurrency. It's often painted as this new financial frontier, decentralized, totally open, and just packed with opportunity. But beyond the headlines of overnight millionaires and these huge technological leaps, there's another story. It's a story of unseen costs, of unexpected hurdles, and a psychological toll that, let's be honest, rarely makes the front page. So in this explainer, we're going to uncover these hidden costs, one layer at a time.
This quote, it just perfectly captures the magnetic pole of the crypto market, doesn't it? It's like a high-wire act, but with no safety net. The chance to make life-changing money is always there, but so is the risk of losing everything. And that tension, that's the engine that drives this entire world.
And when we talk about high reward, this is what we mean. In 2024, a single Bitcoin hit a jaw-dropping value of over $73,000. It's numbers like these that just dominate the conversation, pulling in new investors who are all dreaming of catching that next big wave. This is the glittering prize that everyone sees.
So, yeah, it's pretty easy to see the appeal. The idea of those huge returns has created a global phenomenon. But what we see in the headlines, that's really just the tip of the iceberg. To truly get what you're getting into, we have to look at what's lurking beneath the surface.
And that appeal is, well, it's undeniably powerful. Just look at this growth. Between 2018 and 2020 alone, the number of crypto users worldwide exploded by about 190%. This stopped being a niche hobby and became a full-blown mainstream movement. It just shows the massive appetite for this new kind of asset, even with all the risks.
Okay, so let's start with that first layer of costs, the ones hidden just below the waterline. These are the direct financial hits that a lot of new investors just don't see coming. The fees and the obligations that can slowly, or sometimes very, very quickly, eat away at your profits.
One of the most common surprises is something called the gas fee. Basically, every time you buy, sell, or even move crypto on certain networks, you're paying a commission. It's really just a toll for using the blockchain highway. The catch is, this fee isn't fixed. It changes based on how busy the network is, which means the cost of a simple transaction can swing wildly.
And this is where it gets really interesting. Look at the incredible range in these fees. A Bitcoin transaction might cost you, on average, about $1. But on the Ethereum network, if it's a busy day, that same kind of transaction could see gas fees spike to over $200. That's a cost that can flip a profitable trade right into a loss.
And then there's the tax man. Yep, a lot of people don't realize that in most places, every single time you sell crypto for a profit or even trade one type of crypto for another, that can be a taxable event. The system often sees it as you selling one asset to buy another, which means you've got to report it and potentially pay taxes on any gains. It adds this whole other layer of complexity and cost.
Beyond the fees and the taxes, there's the very real risk of just losing your money to scams or hacks. In 2021 alone, an estimated $14 billion in crypto was tied up in illicit transactions. That was a 79% jump from the year before. And it's a pretty stark reminder of the security risks in a space that's still largely unregulated.
But here's the thing. The most significant costs, they aren't financial at all. Now we have to go deeper into the psychological price of trading crypto. The stress, the anxiety, and the emotional roller coaster that perfectly mirrors the market itself.
This is the crucial question, isn't it? Your portfolio tracker can show you your profits and losses in real time, minute by minute. But what it can't measure are the sleepless nights, the constant gnawing anxiety, or the strain it puts on your mental well-being.
Think about it. Traditional stock markets, they open and they close. But the crypto market, it runs 24/7 all year round. There are no breaks. For traders, this can create this immense pressure to be constantly watching the charts, which leads to burnout, exhaustion, and just chronic stress.
And this right here, this shows you exactly why that stress is so intense. Can you imagine watching your investment just plummet like this? In 2022, Bitcoin's value dropped by a staggering 64%. Experiencing that kind of drop in real time is a powerful, powerful source of anxiety, even for the most experienced investors.
And look, this isn't just anecdotal. A major review, which pulled together data from over 11,000 people, found real, measurable links between the pressures of crypto trading and a whole range of mental health issues. The point is, this stress isn't just a feeling. It's a real, documented phenomenon.
The huge emotional driver in this world is FOMO, the fear of missing out.
You see a coin's price just skyrocketing and it triggers this intense urge to jump in, right? Well, that often leads to impulsive decisions, buying at the absolute peak right before a crash. It's a psychological trap that has cost countless investors a fortune.
Okay, so knowing these hidden costs is the first crucial step. The next is learning how to navigate them, because it is possible to engage with this market more safely. It all comes down to developing smarter financial and emotional habits.
So let's start with managing those financial costs. You don't have to be a victim of high fees. By keeping an eye on network traffic, you can make your moves during quieter, cheaper times. Weekends, for example, often have lower gas fees. And, doing one larger transaction instead of a bunch of smaller ones can also save you a lot of money in the long run.
Now, on the emotional side, building smart habits is your best defense. This means going beyond just watching the price. Understand the technology you're investing in. Before you even buy, decide on your targets, when you'll take profit, when you'll cut your losses, and then actually stick to them. It takes the emotion out of it. The golden rule, of course, is to only invest what you are truly prepared to lose. And finally, do your own deep research. Don't let social media hype and FOMO run your financial strategy.
Ultimately, it really just comes down to this. The financial costs, the transaction fees, the taxes, those are the price of admission to the crypto market. You can plan for them. But the real, hidden cost, the one that can do the most damage, is that emotional surcharge, the stress, the anxiety, and the sleepless nights.
Being a successful investor in this space isn't just about picking the right coin. It's about understanding and managing all the costs, especially the invisible ones. Because in crypto, the biggest cost is the one you don't see.